So I'm assuming you're still holding Tesla as an investor.
Yeah,
This has
you
been a
bet.
pretty unprecedented rise of like, okay, now we're going from 40 billion to 400, throwing all comps of traditional automakers out the window. We're worth more than like every US automaker combined times five. Like, how are you thinking about the investment thesis here and, holding on to this valuation and the upside? Because I mean, I've been a lot to process of like, wow, I did not expect it to go up this fast. I feel like we're definitely pricing in a little bit, every time it goes, we're stretching the valuation, we're going further into the future and pricing in more of that future. So I'd love to kind of get your take on like, how much of that future are we truly pricing in? Because I think that is the crux of the valuation debate.
I am into Tesla for the long term. I invested to hold it until the company passes $1 trillion in market cap. That's going to happen. It's just a matter of time. I mean, most of that has happened already. If you think about it, the hard part, I know we're at less than half a trillion now, but the 600% growth from a year ago to where we are now was the hardest part of it, right? From here, what's going to happen is just quarter after quarter of Tesla pummeling the Wall Street critics with record revenues, record earnings. Even if regulatory credit revenues decline, which is what they're complaining about lately, that's the flavor of the week
Can't believe
that
it.
you hear from Gordon Johnson and Tesla Charts and the rest of that bunch. They think the regulatory credits are going away right away because every automaker in the world is going to start making so many EVs and selling them that they're not going to need to buy any regulatory credits. Wake me when that happens. I don't know what these cars are that are supposed to be selling uh, so much, right? So yeah, I'm holding on to my shares for a long time because this stock has a long way left to grow. The volatility is what upsets people, right? That it runs way past a valuation number and then it runs back. It doesn't bother me too much. I do a very detailed forecast of Tesla for future quarters. So I know where I expect the stock price to be. I have to forecast it because I have to forecast Elon's compensation package, which is tied to 12 market cap tranches
Hmm.
that depend on the stock price, right? So for me to know how quickly the CFO, Zach Kirkhorn, is going to be accruing expense towards paying off those stock options as they vest, I need to know when Tesla is going to be achieving those market cap milestones. So I think we're a little ahead. I don't want to say overvalued because in the long term we're not. Tesla's got a lot further it can go. But
So how do you
yeah,
think of as an investor, how do you balance that? I really take a step back and say I'm going to waste time if I'm doing such granular analysis because you have such that long term till 2030 couple, a trillion market cap, but yet you're also like crunching the numbers like Wall Street down to the minutia. You sent me like this spreadsheet that almost broke my computer because it had like monthly sales of every single car. You know what I mean? Like, so how do you? Maybe you just like nerd out on modeling and that's the way you go. But I'm just curious
yeah.
about how you balance that kind of like you are projecting each quarter super granularly thinking about that, but also maintaining that long term focus.
I am a spreadsheet nerd. That is my rep. The coworkers who are also finance people who work on spreadsheets all the time are coming to me asking for advice on how to model stuff. I nerd out on statistical linear regression. I do a lot of discounted cash flow analysis. I do a lot of capital investment pro forma work to figure out whether it makes sense to make capital investments based on their return versus a hurdle rate. So that's the stuff that I do at work on a regular basis. That stuff comes pretty easily to
Hmm.
me. I do a lot of planning, forecasting, um, P&Ls. So that's what my forecast is. It's the income statement for Tesla. I don't worry about the balance sheet, particularly since this last $5 billion raise that Tesla got at a very nice valuation overall. My hat is off to Zach for getting $5 billion for 1% dilution,
It's
a little
incredible.
over. That's a heck of a lot of money to get for only 1.5% dilution, if that. And think about what Tesla's going to be doing with that 5 billion. They're going to be investing that into capital projects that have tremendously high internal rates of return. So when Tesla puts a gigafactory in Berlin, they no longer have to pay the import duties and the price or the effective out-of-pocket cost to a buyer in Europe comes down because those import tariffs aren't there anymore, right? Same thing happens in China. Same thing will happen in future gigafactories, right? You make the product more affordable, and you drive down your costs of logistics for shipping globally, right? So uh, every part of that is good for Tesla's income statement. It improves automotive gross margins. Ultimately, it improves earnings, bottom line, right? So Tesla's strategy is working. I cannot underscore enough. Tesla's strategy is working.
Yeah, and like you said, it's, all the hard work is done. It's because it seems like they validated once we spend money on a production line, the ROIC is super high, like with Model 3 and now Model Y, they're just validating more and more profitable. So it's like, okay, let's just replicate this over and over again. And so they're not trying to show earnings. They're spending like crazy to invest in all these ROIC projects. But on the flip side, I'm like, they can't even spend it fast enough because the CapEx is ramping, but they're getting way more efficient at CapEx. They're actually still producing
Yeah,
positive operating cash flow. Cash is piling up in the balance sheet. We got 9 billion, another 5 billion. Now I'm like, we got 14 billion. What is Elon going to do with this? Because this is getting fun. Because we're already, it seems like, cranked up the dial on capex as far as we can go. Even with Austin having, like, even no matter if you assume how expensive this new battery production line is in Austin, it's still not going to be able to spend all the money they have. So is it? Are they going to
yeah.
build a power plant or utility or like, I don't know. I'm just really curious if we can dive into this because
Well, we got a hell of a lot of batteries we need to make, right? So that's what Battery Day is going to tell us all
so is
about.
that the capex you think that they're going to have?
Uh, yeah, so I know Elon's plan is to make those cells on site at the gigafactories, right? That's the most efficient way to do it is to get your cell production to the same place that your final auto assembly is happening. Did you see the tweet that your buddy Rob Maurer dropped on Greg Wester on Twitter?
No.
Greg was complaining about all the capital raises over the past couple of years, and Rob pointed out the simple arithmetic. Yeah, Tesla had 2 billion in cash back then, and they've raised 10 billion, and they have 12 billion now.
Yeah.
None of it has disappeared. There's no cash burn. That's old FUD from a long time ago, but you'll still see
Love
Tesla
it.
keep repeating it that Tesla needs to go back to the capital markets to survive. And it's not true. For 2 straight years, Tesla has been free cash flow positive after paying for the cost of capital expenditures, right? So it's a self-funding company at this point. And yeah, I think that money is going to get invested into what we learn about on Battery Day.